This is Craig Haugard with your Financial Issues Egg update for June 18th. Commodities as a whole were hammered lower yesterday, and corn followed as part of that commodity basket, and also lower because it's tied to a rumored mandate change that the Biden administration seems to be planning for its oil constituency. Traders also pointed to a generally widespread range across Iowa as a source of market pressure. Corn ended yesterday's session with the futures locked down the 40-cent limit. As a result of closing the limit lower yesterday, we'll have a 60-cent limit in place for today's trade. Soybeans saw history being made yesterday. Since soybean futures started trading back in 1959, we have never had a one-day move as large as what we experienced yesterday. Helping to set the stage for yesterday's debacle was the recent move by the CME to double the size of positions that speculative funds could hold. Now, when the market's going up and the funds are buying aggressively, we on the production side of the equation tend to enjoy the ride. However, when the funds are all trying to liquidate at the same time, we can rapidly experience blood in the streets, and that's what happened yesterday. The sell-off was triggered in large part by the rumor that the Biden administration will grant waivers from the biofuel blending mandates to U.S. oil refiners. The trade has taken the rumor as valid by watching the legislative reaction and the lack of denial from the EPA. At the close, the July futures were $1.1875 lower, while new crop November futures were down 90.5 cents per bushel. The wheat market took a beating from spillover weakness in the row crops, a stronger U.S. dollar, and increasing hedge pressure from winter wheat harvest. Yield reports for hard red winter wheat have been consistently running in the 60s, while the early soft winter wheat harvest yields are reported to be kind of in that 58 to 60 bushel per acre range, and the overall quality of the crop looks very good. Hard red spring wheat dropped the least yesterday and is still being impacted by drought. Reports from that part of the world speak of a crop that is only a foot or so tall and heading out. I look for the USDA to reduce the size of the spring wheat crop in their next report. Cotton futures were also under pressure, with both the old and new crop futures closing lower for the day. At the close, the December futures were down 189 points, closing at 84.06. Livestock futures were also a sea of red. At the close, August live cattle futures were $3.82.5 lower, while August feeder cattle were down 30 cents at the closing bell. Lean hog futures were down the extended limit in the nearby months, with July futures finishing $4.50 lower for the day. Class 3 milk futures closed lower every day this week. At the close, the July futures were 15 points lower yesterday, settling at $16.82. Finally, meat cutout values were mixed. Choice box beef